Have you ever seen a company announce a record-breaking year and then watch its stock just completely tank? Well, that's exactly what happened with Pentair, a major player in the water industry. It's a real head-scratcher, and today we're going to get to the bottom of it. So first things first, who even is Pentair? You might not know the name off the top of your head, but I bet you've come across their stuff. They're the ones making everything from the pump in your backyard pool to these huge industrial-scale water filtration systems. Basically, if it has to do with moving or cleaning water, they're a big deal. Okay, so a record year. You'd think that would send the stock soaring, right? Champagne corks popping? Nope. The exact opposite happened. The stock just cratered, dropping over 10%. I mean, what a brutal day for investors. It just doesn't make sense on the surface.
Which brings us to the big question, right? How on earth does a company hit it out of the park, have its best year ever, and then see Wall Street just punish it? That's the mystery we're going to solve.
All right, so here's how we're going to break this all down. We're going to look at 5 key pieces of this puzzle. First, just how good were those record results? Then we'll dive into the economic storms they're sailing through. After that, we'll check out their game plan, their winning playbook. We'll peek under the hood at how different parts of the company are actually performing. And finally, the big one, we'll look at their roadmap for 2026.
Okay, let's kick things off with the good news. And trust me, it wasn't just good, it was great news. I mean, on paper, 2025 was an absolutely incredible banner year for Pentair. And just look at these numbers. We're talking a record $4.2 billion in sales. Earnings per share up a solid 14%. And get this, a record $748 million in free cash flow. Now that's the real cash they have left in the bank after paying all the bills. They even bought back $250 million of their own stock, and, this is amazing, they're on track for their 50th year in a row of increasing their dividend. I mean, by any measure, these numbers are just phenomenal.
So, yeah, that brings us right back to our central mystery, doesn't it? If the report card was straight A's, what's with the disconnect? It's a classic case of the market not just looking at where a company has been, but trying to figure out where it's going. And it looks like Wall Street saw some storm clouds gathering.
And that leads us to the first major piece of the explanation, the pretty serious economic headwinds Pentair is up against. And these aren't small problems. We're talking about massive forces that are way outside of any one company's control. And wow, this table really puts it into perspective. Look at this. Tariffs alone cost them about $70 million in 2025, and they're expecting that to get worse, with another $30 million incremental hit coming in 2026. And as if that's not enough, the cost of their raw materials, especially metals, is going up faster than they expected. These aren't just tiny numbers on a spreadsheet, they are a direct threat to their profits going forward.
But here's the thing. Pentair wasn't just sitting there waiting for the storm to hit. They saw these challenges on the horizon, and they've been running a really smart internal playbook to make the company tougher and more resilient, no matter what the economy decides to do.
You know, their CEO, John Stauch, summed it up perfectly. He said, "Our teams continued to execute with clarity and agility." And really, those are the key words, clarity and agility. It means they know exactly what they need to do, and they're moving fast to get it done, focusing only on the things they can actually control.
So what is this master plan? Well, it's really a 4-pronged attack. First, they've got this big transformation program to make their operations way more efficient. Second, they're using the classic 80-20 rule, focusing all their energy on the top 20% of customers and products that actually bring in 80% of the cash. Third, they're being smart about their portfolio, buying up fast-growing companies and selling off the parts that are dragging them down. And finally, they're doubling down on innovation, launching cool new products that are actually winning awards.
And you want to know if it's working? Here's your proof. 15. They've had 15 consecutive quarters of margin expansion. Let that sink in. That's almost 4 years. Through a pandemic, inflation, all of it. They have consistently gotten more profitable. That, my friends, is what you call solid execution.
So that's the high-level strategy. But how did it actually play out in the different parts of the business? Because it wasn't all sunshine and roses everywhere in 2025. Let's pop the hood and take a look.
And man, this chart tells you everything you need to know. The pool division was the absolute hero of the year, up a whopping 9%. The flow division, pretty solid, up 3%. But look over here, water solutions was actually down 6%. So what does that mean? It means the whole company's record year was basically carried on the back of a booming pool business, which was strong enough to make up for weakness in other areas.
Okay,
So this is it. This is the crucial part. It's all about understanding where Pentair is going next. And that brings us to their guidance for 2026. This is what Wall Street was really listening for, and it's the final piece of our puzzle. So even with all those headwinds we talked about, the company is still predicting another year of pretty solid growth. They're telling investors to expect earnings to go from $4.92 up to somewhere between $5.25 and $5.40. Now, that's an increase of about 8%, which is, it's good, it's solid. But maybe, just maybe, it wasn't the kind of explosive growth the market was hoping for, especially with those tariffs looming.
And a huge part of their plan for the future is this big internal shakeup, what they're calling a strategic realignment. Basically, they're taking their residential flow business and smashing it together with their water solutions business. Now, why would they do that? Well, it turns out both of those divisions are trying to sell to the exact same person, your local plumber in North America. By combining them, they think they can get way more efficient and find new ways to grow.
And here is a really, really important detail that you have to catch. Their entire forecast for 2026 is built on the assumption that the residential market does not recover, that it just stays flat. That is a super conservative bet. On one hand, it explains why their guidance isn't through the roof, but on the other hand, it means if things get even a little bit better, there could be a lot of upside.
Okay, so let's tie this all together. What are the key takeaways? Number 1, Pentair's 2025 was, without a doubt, a record success story built on great execution. Number 2, the market's freakout was all about the future, those pesky tariffs, and a cautious outlook for 2026. Number 3, the company's whole strategy is about controlling their own destiny through efficiency, not just hoping for a hot market to bail them out. And finally, they're making big moves internally to set themselves up for future growth.
And that really leaves us with one final, fascinating question. Pentair's whole plan is built for a tough environment. They've proven they can execute when things are difficult. But what happens if the clouds part? What happens if that conservative bet they made on the housing market turns out to be wrong and things actually recover? What's their true potential then? That's the question Wall Street is wrestling with, and now it's something for you to think about too.